is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, folks. I'm Tommy O'Brien, company live from TFNN, and we kick things off. We got a little bit of selling on Thursday. S&P's right now, negative by 1% on the dot. Now, remember, tomorrow, we get CPI data tomorrow morning, 8:30, following a hot jobs number on Wednesday. And on that CPI, prior to that CPI, we got markets in the red. And how about yields, though? Yields dropping dramatically. You talk about a reversal. Okay, we now got higher price, low yield with the 10-year at 4.1%. So much for a jobs market that was not going to allow this Fed to cut or rates to go lower. We got rates lower, 4.1% right now on the 10-year. S&P's off 1.6%. We get some of the biggest equities out there trading lower. You get the Dow right now, minus 364, off 0.7%, and the Russell off by 1.6%. Crypto, Bitcoin, 66,000 right now, off 2.4%. Crude trading lower, off $1.62 at 62.91. And we jump to metals. Gold off 2.6%. As I mentioned at the top of the hour there, $200 from high to low. 5,100 to 4,900, and you did it in about 45 minutes. Those are 5-minute bars. Yeah, 35 minutes, right? 40 minutes, man. And we're just chopping around near the lower portion of that. Now you take a look at the volume in these metals markets. And yeah, we're getting an uptick today. You know, we were talking about the last 3 days. Just record light volume. And then, boom, the balloon pops a bit on a short-term basis. And listen, I think the dollar's under pressure, okay? And we're not moving lower today with lower yield. But I think the dollar's under pressure. I think the dollar's on its way to 90. It can't find a bid right now. That's going to help the metals markets. But be careful right now, man, because that volume in the last 3 days, vapor thin volume. On the gold contract, you're talking about 118,000, 101,000, and 125,000. And today we're already at 148, and even at 148, we were doing 200 to 250,000 on a constant basis in gold. We're at 148 today. Silver, same thing, last 3 days. 60,000 contracts, 51,000, and 65. Now today you have a little bit of an uptick. We're at 80,000. You can see how often we've been doing 100, 144, 100, 131, 136. Even on this dramatic pullback, only 80,000 right now. You jump over to platinum, off by 5.3%, off $114. Not as pronounced when you talk about the volume, but still pretty light volume in the last couple days. And we go to copper. I was talking about copper, looking almost the strongest when you look at the volume, the spike we got yesterday. Copper off by 3%, off 18 pennies right now. All right, we jump around. So Cisco, how about this move, man? Cisco, worst day since 2022 is the headline, down 12.2%. And no matter what you look at, right, you're going to take back the action since basically November. On a daily basis, yeah, let's check it out and go back 5 years. It's been a straight shot since April. Yeah, and just like that, pretty remarkable. You can trade up, and within a day, we give it back in a day, off 12.2% on their numbers, Cisco. And let's jump around to the heat map here. So S&P 500, yeah, we got a lot of red, but check it out, right? It's growth stocks, technology, software, okay? All of the above. Apple off by 5%. Meta, 2.5% in the red. Broadcom, negative by 3%. Micron hanging on to the green by 1.3%. All right, healthcare stocks in the green. Lilly up by 4%, but how about Walmart? Right, Walmart trades to a new all-time high today. And you're just about to complete a 1-to-1 A to B, C to D. Remarkable. You're talking about near about 135. That's your weekly volume on Walmart. And yeah, you're probably not going to get above what we did last week. 147 million shares last week, and you're only at 90 right now. And we're coming into Friday trading tomorrow. But boy, Walmart, a rush to safety as you get a rotation in this market right now. Jump over the healthcare stocks trading higher. Lilly up by 4%. Put it back to a daily. All right, we're just in the consolidation right here on Lilly. Jump over to Novo. We were talking about them this morning. Novo Nordisk up by 0.5% right now. All right, let's talk a little bit of AI. So Anthropic, they closed a $30 billion funding round. That's not the valuation of the company. That's how much money they just took in at a $380 billion post-money valuation. You talk about it, man. Second biggest private financing round on record following, you guessed it, OpenAI raising $40 billion last year. Was led by Coatue, and Singapore Sovereign Wealth Fund, in addition to funding from Microsoft and NVIDIA. Now, you know what's wild here? Now, they just ran a Super Bowl ad. That's think about it. Think how little that Super Bowl ad costs compared to the amount of money that they're spending on the build out of AI. Now, not every time I see this, but when you see these types of numbers, okay? Sam Bankman-Fried, SBF, okay? Not Sam Altman. I'm talking about the FTX disaster, and I'm digressing here, but man. So, if you recall, he put $500 million into Anthropic, okay? One of his investments. Now, he put money into everything because he was taking investor funds to a certain degree, okay? So, that being said, one of the things he did was put $500 million into Anthropic for an 8% stake. An 8% stake, which would now be worth $30 billion. And he had a number of other investments that have played out just magnificently. The problem being, he was running a scheme where he was taking client money, and he couldn't hold it up long enough before people found out. In 2022, the year it exploded, the stake in Anthropic, right, was sold, receiving $1.4 billion. That stake's worth $30 billion right now. Isn't that remarkable, man? Oh, $500 million for 8% of Anthropic. He makes that investment, but he had too much going on, and yeah, to say the least, right? But man, just nonetheless, they're finding the money to raise $30 billion. Sovereign wealth funds, Microsoft, NVIDIA in there as well. NVIDIA today down about 1% off $1.93. Gold off 2.7%. Silver off about 9.4%. Markets in the red. We're coming back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P is off by 78 points right now. And, remarkably, this was just a one-time quick sell-off right now. As in, we got 45 minutes of negative action. That was it, right? And then the market just chops around. All that selling, the volume just dries up a bit since then. And there it was, basically from about 10:45, 10:30 this morning till 11:30. You sell off and things bounce a bit. You jump over to Cisco. Now, that was not the case with Cisco. You open near 80. Right out of the gate, you trade lower. You're lower by 12.5%. Now, you take a look at Cisco, okay? These are not disastrous numbers. The expectations right now of some of these companies, especially when you're talking about AI, are sky high. This is when it had dropped 7%. You're down 12.5%. But check it out. Earnings, right in line. You beat on revenue. The current quarter, you just meet expectations. Analysts were looking for $1.03. And the fact they probably said, you know what, we're going to give ourselves a range of 2 pennies around $1.03, and revenue is going to be at 15.4 to 15.6, right in line. But guess what? Earnings, right? Investors have been looking for Cisco to play a more central role in the AI boom. $2.1 billion in AI infrastructure orders from hyperscalers during the quarter. You put this in context to some of the numbers of money getting thrown around when you have Anthropic today getting $30 billion. The core networking revenue was up 21% to $8.3 billion. The market was looking for 7.9. The point being, these were decent numbers. These weren't disaster. And in one day, you trade down 12.5%, and you're right back to the 382, just like that. You're coming into the earnings from 90 days ago on Cisco. So yeah, real estate stocks, it's like, well, a different day, a different story, a different class of equities, right? But boy, this was quite a pullback that we had going on, okay? We have going on. Commercial real estate stocks nosedive Thursday as traders worried about risks to demand for office space from higher use of AI. I love how, like, every day the market gets one level deeper, right? It's like, okay, if you're in a market that has high margins and is labor intensive, it would make sense that that is an area that AI is going to be ripe for. And then you go, okay, no matter what, there's certain areas where you're going to lose jobs. Okay, people are going to lose jobs. Commercial real estate is going to take a setback. But yeah, CBRE, 15%. 2-day decline, 26%. CBRE, right? Let's pull it up. Well, there's your weekly. So much for a 382 of the April move. Watch this. Wow. How about a 382 of a 2-year move in 48 hours? Right? Stairs up, elevator down. Not a new story. Be careful, folks, especially in, don't get over leveraged in any one equity right now, because who would have thought that that's possible in 48 hours? You give back almost 40% of your gains for 2 years with one overnight session. Yesterday, overnight, today. Boom. And yeah, they're not the only one. Many other equities right now. Concerns about increased use of AI applications, reduced demand for office space. Well, the jobs are showing it. You think about all those jobs in healthcare. It's not in financial office buildings. It's not in office buildings of any degree. They're in hospitals, the jobs getting created. And education. But yeah, and, obviously, when you get a pullback like this, folks, you look for a sign of strength. Where are we going to trade into? Yeah, 120. Talking about going back to your earnings from April of 2025. Yeah, April of last year. Just kind of this low you were at from January to the April tariff pullback to the low in June. Oh boy, you don't think that you'd be back there that quickly. When you're at 174 this week, you're at 136. Some of the other equities that have just gotten pummeled, Salesforce cut in half. Look at IBM down almost 5%. Dell, okay. Yeah, they're talking about Dell and the Tigers Den today. All right, we'll see with the volume. That was a nice sign of strength last week with some volume. You're giving it back this week, but you don't have the volume. Let's check out the daily. All right, you're below this area, though, on a short term, and you're going to have volume today probably by the time we reach 4 o'clock on Dell with a day like today. Walmart's not stopping. Look at this, up 4.3% as they sell off the S&Ps. Walmart is a safety play. Not so much the case with Apple right now. Look at Apple, man. Oof. If you're looking at Apple, folks, check out the channel line. I've been talking about it even since the holidays last year. Saying I'd love to get into Apple, but you're just at the top end of this channel. And look how often you're going up and down, and you're at the up portion of that sine wave. Even if that sine wave is in a channel going up, you're at the top of that sine wave in this equity right now. 261.40 on Apple right now. Boy, that's a pretty ugly looking chart for Amazon, man. That's a monthly. Whew, and we're already at 713 million shares, and it's only February 12th. Now, we have tomorrow with CPI data, and then we get a holiday on Monday. The markets are closed on Monday for President's Day, Washington's birthday. We always get many holidays loaded early in the year. So get ready for some volatility tomorrow as well. Following up a day like today, we're going to get some inflation data. And you get the VIX coming in at about 20 right now. The dollar's been pretty tame, all things considered, especially when you look at the run that 10 years had. 4.1% right now on the 10-year. We take a look at a daily. We'll see if we're coming back to test the top of this trading area right now. And that area is about a point above where we're at right now when you talk about the highs in November, October, September as well. But the 10-year, 4.1 right now. Quite a move in crude with some volume off 2.7%. Let's take a look at some other equities moving. Palantir. All right, we're not going to have the volume that we had following their earnings on a daily. See how the weekly lines up? Yeah, you're breaking lower on lighter volume. Oh boy, where do you find a bid in this thing, right? It was quite a trip up. You're talking about potentially the highs of earnings a year ago on Palantir. And you got the April tariff volatility lows out there. Oh boy. These markets can always move faster than you think, further than you think, so just protect yourself. Didn't think it was even possible. Right? You're talking about more than cut in half from where we were just trading a couple months ago in Robinhood, down by 9%. S&P's off by 88. Folks, we're coming back with Tim Ord. You got any questions? You want anything to cover? Hit us up in the chat, in the Tiger's Den, the YouTube Den. Let us know if you have any questions. We're coming back with Tim Ord. We're talking markets and metals today. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome Welcome back, folks. We got the S&Ps off 1.3% right now. You got the gold contract down $163. We got some volatility, and to talk about some of the market action, we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30 Eastern Time. Put him on your calendar, folks. And you can reach Tim at his website, ord-oracle.com. He's the author of the Ord Oracle, and he's got a couple great webinars as well over at the TFNN website, right under the Services tab. He's got the secret science of market tops and how to identify the market tops, as well as 6 secret ratios every trader should know. And we talk about some of those ratios here with Tim a couple times a week. Tim Ord, good afternoon.
Yeah, good afternoon. Anyhow, first thing I want to do, the first page here, this is where you can find me. Sometimes, for me, I have to see the address. So somebody tells me the address, I didn't register. But anyhow, this is my address, www.ord-oracle.com. And my email, you can get me at this email right here. And this is on X or Twitter below. So I just wanted to pass that on. So awesome. Let's get to the kind of where we are. This is the first one here is the 2-day average, the third window up. Actually, let me get my drawing tool here. Do a different one, blue. This is the 2-day average of the trend. And I talked about the trend quite a bit. This is a good indicator to find panic in the market, and panic only forms in lows. The 10-day trend up around 1.2 is the best intermediate time indicator. They usually find kind of intermediate term lows that can last a couple of months or even longer. The 2-day trend is obviously a shorter term type indicator because it only takes in 2 days. And right now, when I made this chart, it was coming in 1.26. Anything above 1.2 shows panic in the market. So even though we're down today, over 1.3% or better, the trend's coming in. When I made this chart, 1.26. So I don't think at the moment the potential pull of actually the bigger consolidation starting. I still think there could be one more bounce up because the 2-day trend's in bullish territory. And I marked the times previously when this 2-day trend happened. Goes back to, looks like about August of last year, so a good 6 months back. And all the times that 2-day trend got above 1.2. And again, we're at that stage right now. So I think there's still one more bounce up. On a bigger time frame, this window right here is the SPX VIX ratio, and it's showing a divergence. In other words, when the ratio is making lower highs and the S&P is making higher highs, this picked out the February high of last year. The market pulled back. We had another time in looks like about November. We had higher lows. We had a kind of a minor pullback. This divergence has actually been going on since it looks like about December sometime. And we really haven't hit a higher high. I think this day right here is actually a higher high. But I thought we might be one more time up to test the upper Bollinger Band. And I still think that's a possibility. If it's going to happen, it's going to happen within the next week. If not, then I think we may start the consolidation. So I'm kind of waiting for one more bounce. If it happens, it's going to happen between now and mid next week, or possibly late next week at the very latest. So I'm still long.
It is cool, not to kind of jump in, but that VIX, it's remarkable. And today, of course, is spiking higher. But, on a daily basis, as this market, we're not quite at highs, but we're pretty freaking close, right, Tim? And we just, every time that VIX, it was like 13, and then we're sitting at 14, then you're sitting at 15, we're at 16. Yesterday, we're at 17. So it's remarkable. And I love how you show it on the charts, that SPY VIX, because if you just pull up the VIX, folks, you'll see what that chart's showing you, which is since December 24th, nothing like Christmas Eve, you were at 1338. And the market's done pretty well since then. And now we've been shopping around between 16 and 18, right? Kind of. Yeah. Is that a good way to think about when you talk about those ratios, Tim?
Yeah, it is. It is. Cool. So even though the market has virtually gone sideways mid-December, I mean, it's gone up and down a little bit, but really it's gone nowhere. And that VIX, or the VIX is going higher. The SPY VIX ratio. The only reason I do that is because the VIX goes up, the market goes down. So to reverse that, I did the ratio. So it's just easier to visualize how I do it.
I love it.
So,
my dad and I used to talk about the power of the ratios, and I love how when you just understand them, folks, which Tim does a great job. And that's, it makes a lot of sense to me, even more than, it's technical, but it makes a lot of sense. When you have a market, it just could be an indicator, and you put it on those charts of, hey, and quite a number to consolidate at, right? We're basically chopping around near almost 7,000 on the S&Ps. So while we were doing that, the VIX just kept creeping. Yeah.
Yes. Yeah. So it's trouble is the only thing bad about this ratio. It warns you that you're going into some sort of a high. It could be a minor high. It could be this was a minor high back in. This was a decent high. We retraced 14%. This was probably about a 5%. I think the one you're going to see here is maybe a 5% decline. But I don't. But it does warn you. But it doesn't give you doesn't ring at tops. It's hard to find indicators that ring the bell, I guess you might say. Okay, there's the top.
Yeah.
They kind of just.
But it is interesting when you pull up that, because that was the tariff volatility. So, that VIX market was paying attention, that the VIX started going up a little bit, even though the market hadn't pulled back yet when we were preceding the tariff volatility. That's what that shows there prior to that number. Yeah, for that April pullback, right?
Yeah, the April pullback.
It's pretty cool.
So anyway, so here's what I think may happen. This is the SPY. It's a daily chart, but every time you get above the upper Bollinger Band, I can take this chart back further. You can see a bunch of other examples, but I think that's what may happen here. In other words, you get above the Bollinger Band, a lot of times, that's that consolidation right there. I thought we might get up to that upper Bollinger Band, which is right around that on the SPY, around 700. On the SPX at 7,000. So I'm thinking that could happen. If it does, I'll get out of my long and get short. But I'm still actually long right now. So I'm not a bull. I'm just kind of looking for if today's 2-day trend was around 1, I'd be out of this market. But it's up around 1.2, and so I'm thinking, there's still probably one more bounce. But that's my take on the. So let's get into the gold market, which is a lot of people have interest in. So I'm long the S&Ps. I'm kind of bearish, not a huge. I think this year will be an up year, but I think we're just looking for a minor pullback into probably a March low of some sort, then back up after that. So not a long-term sell signal, just a pull back in an uptrend. So we'll get to the metals next.
All right, folks, we're going to take a quick break. We'll be back in 3 minutes with Tim Ward. We're talking some metals, and we got markets in the red. S&P's off by 1.3% right now. NASDAQ off 471. We got the gold contract off $157. We're coming back with Tim, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got some volatility. Markets in the red right now. We got some action and yields as well, with the 10-year sitting at 4.1. We're talking with Tim Ord, folks. Remember, you can reach Tim at his website, ord-oracle.com, and he's got two great webinars over at TFNN, right under that services tab. You order those webinars, folks. They're right on your account page. You watch them as many times as you like. All right, Tim, on to metals. We got a little metals day today. Inquiring minds want to know. What do you think? Let's see it.
All right, this is bullish percent index for the gold miners index / GDX. This chart goes back to 2014, and anything below 1.0, which we actually are right now, we're 0.84 be exact. But I put an RSI with this indicator, and when it gets down below 25, last week we hit 23. It's gone up since then. Right now we're around 42, but it gave a bicycle last week. Market has bounced up, but valuation-wise, anything below 1's bullish, and blue lines here are times like this blue line here, and actually this one right here, this light blue. But those are times when RSI got below 25, and where that correlated. This is a weekly GDX down here. And so, it gave a bullish sign last week. And all of them, previous ones, worked really well. At worst, the market went sideways. But all of them at least bounced some. And so we're bouncing, nothing real significant. But this indicator is bullish, and it does a great job. This next chart is a 50-day average of the up-down volume for GDX. So that measures, you got more up volume than down volume. That's bullish. You do a 50-day average, and anything above zero, the market's in an uptrend. All this blue area here is when this indicator is above zero. And that's what happens in uptrend. So you got, it's a bigger indicator. 50-day average is like 2.5 months of data. So it doesn't attempt to pick out all the wiggles in the market. It just attempts to get the major move, I guess you might say. Yeah. So this indicator is definitely in a bicycle. We're in plus 32 right now. Or plus 13, anything above zero is bullish. So this indicator is not even near a sell signal. This is kind of an intermediate term type indicator. I'm kind of rushing here a little bit because I want to get to a conclusion. This is the same indicator, but it's on an 18-day average. So that's like 2.5 weeks. And anything above minus 10, this indicator works best. Anything above minus 10 is in an uptrend. And this, I took this back a couple, looks like about 3 years or 2.5 years. The blue area is times when this indicator, both indicators are above zero or above minus 10. The next, this is advanced decline 18-day average, and the bottom window is the 18-day average, the up-down volume. And both those indicators are above minus 10. That's the reason why we have a green tan area. When it's pink, it's when it's below zero. So it picks out this minor minor declines, but right now is in a major uptrend. There's not even close to a sell signal here on a 2F. So the shorter time frames are even staying bullish. So let's look at another indicator. This is a cumulative. This indicator goes back probably 2019. And this is a cumulative advanced decline and cumulative up-down volume for GDX. So kind of another bigger indicator, kind of manipulating the indicators in a little different way to have a little different look at the market. And it gave a buy signal. Looks like it probably late March, early April of 2024. Remains on a buy signal. The buy signal is when both those indicators close above the mid-Bollinger Band. And so this is current. We're hugging the highs here, even though we did pull back here a couple of months ago. Internals remain bullish, and so it's on a buy signal again from April. So this indicator is not giving any signs of weakness yet. So it's still in an uptrend. So let's get down to the nitty gritty. So what's going on in the short term here? The week of, I think it was January 26th, we had a bearish engulfing pattern. That's the candlestick pattern where you gap above a previous candle and you close below it. A lot of times that kind of halt the market. What's probably going to happen, though, is we're going to rally back to the old highs, which was, I think, 113 on GDX, and that's the January 26th high. That may find resistance. To get through that high, the weekly volume needs to get up around 250 million shares. If you test the previous high on 10% lighter volume, it's going to be resistance. And I doubt you're going to have 250 million shares on a test of that January 26th high. It's probably going to be lighter. And so you're going to probably just go sideways here. Not the bottom's probably in because you get that test of 1st of February of the January 26th low, and you can see the volume was way probably 30% lighter, maybe 40% lighter. That was support. Can't get through that low. If you can't get through the previous low, they'll try to take out the previous high. Well, the previous high is, January 26th high. And so if you go up there and test that on a lighter volume, 10% lighter volume, it's going to be resistance. So you're going to flip sideways most likely. But that'd be it. I'm long GDX. Am I going to trade this thing? I'm not sure yet. Depends what the volume is. But I may just keep that position because all these other indicators, this one, that one, this one, remain bullish. So sometimes you can take yourself out of a trade and you wish you never did. So I'm kind of contemplating. I may suffer, I guess, to hold that position to 113, and this low I think came in at 93. So I may suffer through that pullback just to hold on to that longer term position because the bigger trends remain bullish. So I may change my mind, but sometimes you get too cute and you change. When you get these big multi-year rallies, which I'm thinking is happening in GDX, sometimes you just want to stay long that market. And I'm contemplating about staying long that market because the internals are doing fine. A lot of gold stocks may consolidate, but you're not going to consolidate where the market's going to retrace 50% of its up move. This one is going to retrace maybe 15% its up move. And that may not be worth it for me. If I had a 50% retracement possibility, I'd definitely be heading for the exit. But I don't think there's a big decline. I think this last low around that 93 is going to hold, and in general, we may just move sideways here. And most of these gold stocks, the big ones are going to take a rest, but there's the small ones are coming up. The mid ones, mid tier are doing fine. So I'm thinking I just may stay long this market. So,
and can I ask you, because I get questions in terms of emails, even just from Gold Report subscribers, and it's a tough one right now. There's a lot of traders out there that have a lot of profits in the GDX, right? Yeah. And they're bullish, and I think the dollar's going lower really this year, which should at least not hurt or help, however it plays out. But they say, man, where do I put a stop in? I don't want to get stopped out, right? Is that something of a level, or are you just kind of riding it and you have a risk factor that that you're there, or maybe those recent lows? How do you look at something like that? Because there's a lot of people in that position right now. It's just been such a run and we got such volatility. How do you look at that? Or you just keep looking at it and tell you what the signals and then they change? Right. Is there a level there? How do you look at that?
It's just actually how that low is going to be tested. I actually don't use stops. I watch my stocks real closely. And if something doesn't act right, I just sell it. But I think if you got a good position, I don't think the market's not set up for a big decline here. I'll put it that way.
I appreciate your analysis, Tim, walking through the charts as always. Folks, check it out, ord-oracle.com, and those 2 great webinars at TFNN. Tim, thanks so much. We'll talk to you on Tuesday, man.
All right, thanks a lot.
Thanks so much. Folks, we're coming back. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps off 108 points, 68.52. NASDAQ off by 520, Dow off 640. As markets accelerate, let's jump back to the Dow for a second. Boy, things are really picking up in the Dow. Yeah. Since I came on the show, we're almost down 300 points from where we just came on the show. You just challenged the lows of about 1 o'clock on the Dow. NASDAQ, same thing, just broke below those lows. NASDAQ's off 2%, man. Everything just got brighter red. Cisco off 13%. Apple off 5.4%. NVIDIA off 1.6%, Broadcom. All right, you check out that GDX. It's remarkable. As I was taking a look at the options in terms of the volatility. So down $7 today. Okay, you take a look at the options in the GDX. You go out to tomorrow, $3.50. Options that expire tomorrow. At the money, you're looking at about This looks a little weird. They're wide right now. That one's especially wide. This one's wide too. These are wide options. Even on the GDX. Look at this bid ask, 133 by 216. If you're trading this option market, folks, go into the middle of that market if you're ever doing this. Puts, calls, don't just buy that on the ask. That is some wide. You go with the SPY and the 0-day expiration options that everybody, of course, loves tomorrow, penny wide, right? 2 pennies wide on some instances. But it struck me that on the GDX even, you go out to next Friday and an at the money put or a call, about $3, $6.50 move, you're down $7 today. This GDX is very volatile right now, folks. Even again, since I just came on the air, you just dropped from 101.24 to 38.33. And meanwhile, they're only charging you $3 in either direction up through next Friday. A lot of volatility. Markets cascading into the lows. Folks, thanks so much for spending your afternoon right here with me. Have a great night. Have a safe night. We'll see you tomorrow.